In yesterday's update, we were talking about, again, the dead cat bounce scenario where we are still under this descending resistance under the bear market box from 2021, which was this head and shoulders pattern over here, which I called. And we're also currently under this golden pocket, which was measured from the top to the bottom. And when you have such a big dump down, I was warning you ever since November, okay, now we've dumped so much, we have to anticipate that we're going to come back about halfway. We could go as deep as the 786 and there's still that risk of being rejected. So we're seeing that rejection right now at the golden pocket, and this is the most common location. This is why I draw it out as gold, but we've seen multiple times on the channel where price can go as deep as the 786. XRP, for example, bottomed out. Let me just show you, because I don't want to just say it and then it's all wrong. So over here, I know this is a quant video, but I just want to show you the proof in the pudding from the low to the high. Essentially, you're meant to retrace to the golden pocket, as we know, so you're meant to come down to there, but then you bottomed out at the 786 before double bottoming and starting to reverse and reclaiming that golden pocket. So reclaiming the level that never should have been lost. So do you understand how actually price comes down, goes below the golden pocket, you're meant to flip it into resistance and continue lower, and you had another opportunity here to flip it into resistance and continue lower, but you're reclaiming it, flipping it to support and trying to go on the path you should have, which was push, exhaust, continue. So now going back to quant, do you understand that? So there's that risk that you still go push, exhaust, continue. We do not want that to be the case, because this is the case that we're seeing with Ripple, just the opposite way around. Do you understand it? Let me flip this chart actually upside down, where we have this big push up. We've measured the push up. It's saying this is your golden pocket, but you can come deeper to the 786. And what we're seeing with Ripple right now is a reclaim of that golden pocket to do the path that it should have in the first place. Now let's flip it back upside down. Do you understand how that would essentially mean this? Now, how do we invalidate that? How do we stop this from happening? Well, I've already mentioned this level 1 million times on the channel. Don't lose $100. Okay, so then we've got the moving averages a lot higher, about $125 and $130 over here, the 20 and the 55 weekly. The 20 is purple, 55 is orange. Now, of course, if we want to continue to actually try and push through this push up is going to have to retrace. So there will be a midpoint. So measuring from the low to the top over here, we've been given some levels. I'm going to scale down to the lower time frames now so we can look at this a bit clearer. So I'm going to actually get rid of this other fib for now, because there's a bit too many levels on the chart. But we've been talking about this level for a long while on the channel, saying we can't lose this. As long as we're above it, we're going to see this continue, or try and continue forward. And that is $136. Yes, in the last day or so, we did have a scare where we did close underneath that $136. But the direct next day, we need to see consistency. So you close below, let's see another close below. Let's see continuation in the day after that. So maybe 3 days on, we should see the continuation. Well, the direct next day, you invalidated the bearish scenario because you were below, meaning we should go down. So let's see some consistency in the next day where we stay below this green line. No, we had no consistency, invalidated the bearish scenario by reclaiming the green line 136 and closing above it with this green candle, which is a bullish candlestick in itself. So I did actually pick up some more quant. Yes, price can come down to the 120. I'm not too fussed. I just saw a nice bullish reversal candlestick, so I went to pick up some quant. Simple as that. Now, if I, of course, zoom in a little bit on the daily, and we will go to the 4 hour because it is a bit clearer on the 4 hour, but there is some sort of shoulder, head and shoulder over here, of a head and shoulders pattern, which a lot of people in my crypto community have been talking about the last few days. Now, of course, we would need to break the neckline, and simply, what was the level we said we can't lose? 136. So let's just use this as the neckline. No closure below 136, no bearish pattern, which is the head, shoulder and head. Or you can also say, because we have this descending resistance over here, you can also say we have a descending triangle. This is your neckline, 136, and your descending resistance here, well, it doesn't matter. You just need to break above it. And first of all, we can't close below this support 136, and then we need to close above this descending resistance, about 100, let's say 143. let's just say 144. We need to see price closing above 144, and then yeah, we might continue. We should continue back to the highs over here. But yeah, equally at any moment in time where you do close below the 136 and you're consistently staying below, we see this is not the daily, but this is the 4-hour time frame, and there have been 2 moments where you actually have closed below this wick. So one closed there, but then the direct next candle pushed price back above it. Then we had the same thing over here, one candle below, no consistency in closing below, just one close below, and then another day, also the next following 4-hour period, it closed back above. So it's telling you it doesn't really want to go below this level. It was, and then price pushed it back above. So the bulls are stepping in every time price goes below 136. Price does not want to go below 136. This is what it's telling us every time it's come below it. It does not want to continue lower. That's why for the moment we need to believe in the bullish momentum, bullish continuation, because the daily time frame is confirming that with the daily candle close that has just happened overnight. And this is saying that this green candle, if I place it on top of the red, this is engulfing the red candle. This is a bullish engulfing pattern that's happened at support, and where we're seeing a lot of bullish momentum. And so this bullish engulfing pattern is usually a reversal chart pattern, so a candlestick pattern, sorry. So that would make sense because we're coming down, we put a bullish engulfing, and now we can see that this over here is potentially going to be a higher low on the daily time frame. Yes, we have 12 hours left, and so that means that what's going on right now with the current candle, this red one, we can't make a judgment. Yes, we can't make a judgment. When we scale down onto the lower time frames, we can see a double bottom over here. We are currently below the neckline, so I would want to see us, of course, back above it, but also taking out the 55, because that's what's thrown us back down. We need to close above the 55 on the lower time frame, such as the 4-hour time frame. We've got 15 seconds left of this current candle. Now that, for me, is a spinning top or bullish hammer. For me, a spinning top, just like this over here, and that's more a hammer and more a hammer, but it's essentially the same candlestick, and we're seeing that reclaiming the 20. So this is going to say price in the next 4 hours is going to try and attempt to break out. If in the next 4-hour period we're losing this wick, chances are it's going to try and break below 136. Do you understand that? How we've now set this wick, this candle has just closed, we've just set a new candle. So going forward, after this has just been set, we can't lose this, otherwise it's back to 136. And as we've been saying, lose 136, we're no longer going to 160, 70, 80, 90. We want to go to 160, 170, 180 to 190. So in order to do so, we need to remain above 136. And this is going to give us chances of breaking again that descending resistance that we find ourselves under. So let's just say 144, 145 is the level we want to see price breaking through for the continuation of this uptrend towards back to our high 160 and onwards and upwards past this golden pocket and past this bear market box, flipping it back into support, heading onwards and upwards to $250. But understanding $250 is going to be a big brick wall of resistance. Well, in the past we can see that we tried to invalidate these bearish targets by climbing back above this purple line, but as long as you're below the purple line, we should go down. So we were below, we went down, we were below, we went to it, and we went down. So it's all about that old head and shoulders pattern from 2021, and as long as we remain below that neckline, we should actually expect continuation lower. So in my eyes, you've retested it. Here we've had a big dump that's saying, you know, this could potentially be a dead cat bounce. We can't lose $100 that we've now set, which is an amazing psychological level. We'll remain above this and we're bullish. Yeah, even though I'm saying that, you can still dump to it. That would be a 40, where is it, current price? Yeah, about a 30% dump. And so yeah, that could still be the case, even though I'm saying, yeah, price needs to stay above this. You can still dump to it. It just needs to stay above it to continue up. Now, I know that sounds annoying, but it's just trading. We just need to remain above this, and it doesn't matter how deep we dump, just don't dump below this, and it's going to give us another opportunity to break above this. This is what we need to see going forward, but at the moment we're not coming down below this 382, and with a newly formed uptrend you can just stop at the 382 before continuation. So my main focus are these 3 fib levels, but at the moment we've been constantly talking about 136 over the last week, 2 weeks, 3 weeks, I don't know how long now, but we've been constantly getting that 136 level in everyone's minds, and that's the level that we've been defending for a good while now. And as long as we can remain above it, price should actually continue back up to this key area of resistance, that yellow descending potential descending triangle resistance that we need to break through to invalidate the potential scenario of a bearish pattern going all the way back down to our bottom. So we don't want that to be the case, guys. We really don't want that to be the case. And everything, all this bullish sentiment has come because we never lost that $100 over here. And luckily enough, I gave these two ascending triangle patterns. Thank you guys for tuning in. Like, subscribe, and comment. And I'll catch you guys in the next one. Make sure you follow my Twitter, because I'm going to be doing a 5,000 subscriber course giveaway for free, of course. So follow me over there. It's linked underneath this video. But if you want to take action on the mentorship on the course, it's currently discounted till we hit 5K subscribers. So message me over there on Twitter. Thank you guys.